Hey everyone, welcome back to another video. Today, I'm excited to share with you the 9-month update of my journey investing $1,000 each month into undervalued stocks. As you can see, I've invested $9,000 over the past 9 months, spread across 21 different stocks. It's been a fascinating ride with plenty of ups and downs, and as always, I'll be completely transparent with you about my progress. Here's how this video will go. I'm going to walk you through my portfolio stock by stock. I'll reveal today's stock prices live, talk about how each investment has performed so far, and share with you the 12-month price targets from Wall Street analysts for each stock. I'll also share with you guys my thoughts on whether I'm holding, selling, or just crossing my fingers on some of these stocks. If that sounds good to you, let's dive in. So let's start with Adobe. Adobe is one of my favorite tech companies, and as you probably know, they're the creative software powerhouse behind tools like Photoshop, Illustrator, and Premiere Pro. I bought one share at an average cost of $505.45. Today's price is $553.50, which means I'm up by $48 or a nice 9.5% return. Wall Street analysts have a 12-month price target of $622.56 for Adobe, suggesting another 12.5% upside from here. Personally, I feel really good about Adobe's continued dominance in the creative software space and their strong subscription revenue model, which is why I'm not planning to sell my Adobe stock anytime soon. Next up, we have Alibaba. You've probably heard about Alibaba before, as it's often called to be the Amazon of China, and for good reason. I picked up 2 shares at an average cost of $72.45, and today's price is $86. That's a gain of $27 or an 18.7% return. Wall Street is very optimistic about Alibaba's future with a price target of $127.05, a whopping 47.7% increase from today's price. With China's economy showing signs of stabilizing and Alibaba being a leader in e-commerce and cloud services, I see a ton of growth potential here. So I'll be holding onto the Alibaba stocks for sure. And now let's talk about Apple. Apple, as you all know, needs no introduction. It's a staple in so many portfolios and mine is no exception. My average cost for Apple is $173.21 for 3 shares, and today's price is $242.30. That's a gain of $210 or an incredible 40.5% return. Analysts had a 12-month price target of $243.80, which Apple has already reached. But here's the thing, some experts think the price could go even higher, with $300 being floated around as a possible target. And honestly, I don't think any of us will be surprised by that, since Apple has an unmatched ecosystem and their customers just keep coming back for more. So Apple will definitely be staying in my portfolio forever. Now let's move on to Baidu. Baidu is another Chinese company I'm betting on. If you're not familiar with them, think of Baidu as the Google of China. They dominate the search engine market in that country. So I bought 3.25 shares of their stock at an average cost of $85.53, and today's price is $86.40. That gives me a small gain of only $2 or about 1%. Wall Street's price target for Baidu is $112.68, which suggests a potential upside of 30.4%. One of the reasons I'm bullish on Baidu is their advancements in AI and self-driving cars. They're making big moves in industries that could take off in the future. But as you can probably guess, this one might take a bit more patience before we see any big returns. Next up is Boeing. As you guys might already know, the company has faced its fair share of challenges in recent years because of all the issues with their planes. I have 9 shares of Boeing at an average cost of $172.39, which means I've invested over $1,500 of my own money into Boeing. But today's price is only $153.80, leaving me with a loss of $167 or negative 10.8% loss. So you might be wondering, why am I still holding onto Boeing? Well, in my mind, despite the short-term struggles, Boeing remains one of the largest aerospace companies in the world, and Wall Street analysts are giving it a 12-month price target of $193.38. That would mean a 25.7% increase from today's price. So I see Boeing more as a long-term recovery play, especially as air travel and demand for aircrafts continue to grow in the future. Now let's move on to BYD Company. If you don't know them, BYD is a Chinese electric vehicle company that's been making a lot of waves recently. I own 2 shares at an average cost of $57.75, and today's price is $68. That gives me a gain of $22 or a solid 19% return so far. Wall Street has a price target of $88 on BYD, which suggests a potential upside of 29.4%. With electric vehicles becoming more and more mainstream and BYD's strong presence in the Chinese market and in other countries within Europe and Asia, I think there is a lot of room for future growth for this company. Next, let's talk about Chewy. Chewy is a fan favorite among pet owners, and I jumped in with 23 shares at an average cost of $16.84. Today's price is $31.52, which means I'm up $337, an amazing 87.2% return. Wall Street analysts have a price target of $37.58 for Chewy, which represents a 19.2% upside from here. As a company, Chewy has been crushing it with their subscription-based business model and their ability to keep their customers loyal. Pet spending in the US is incredibly resilient, and Chewy has carved out a niche that's so hard to compete with. I'm very happy with how this investment has performed in my portfolio, and I see even more room for growth in the future. Next is Chipotle. And who doesn't love Chipotle? Their burritos might unfortunately cost over $10 now, but their stock has been giving me some good returns. I bought 6 shares at an average cost of $49.85, and today's price is $65.25. That's a gain of $92.40 or 30.9% return. Wall Street is giving Chipotle a price target of $65.89, which is pretty close to where it's trading at now. I would say Chipotle is fairly valued at the moment, but since I love their burrito bowl so much, I think the company has room to continue growing in the future, and I'll be holding onto their stock for life as a loyal customer. Now let's look at Costco. It's another company that my family and I are loyal customers of and where we spend thousands of dollars each month. I bought a fraction of a share, 0.25 to be exact, at an average cost of $721.16. Today's price is $991.28, which means I'm up by $68 or 38.1% return. I honestly should have just put all my net worth into Costco a few months ago, and I really regret not doing so. Wall Street analysts have a price target of $986.26, suggesting it might be slightly overvalued at the moment. But here's the thing, Costco's membership model and consistent ability to drive traffic to their stores make them a fantastic long-term play. People love their deals, and their business has proven to be incredibly recession resistant. I'm definitely holding onto Costco stocks for life. Now stock number 10 on our list is Disney. As you probably know, Disney is more than just Mickey Mouse. It's a global entertainment empire. I bought 10 shares at an average cost of $97.97, and today's price is $116.70. That's a gain of $189 or 19.3% return. Wall Street has a price target of $125.17 for Disney, suggesting a 7.3% upside from here. Disney has so many different revenue streams like theme parks, movies, ESPN, Disney Plus, and many others that make it a very reliable investment to hold on to for long term. Now let's move on to Estee Lauder, which is a beauty company. And I'll be completely honest, when it comes to beauty products, I don't know much about them at all, but my female family members are definitely Estee Lauder's target customers. So when I noticed the stock price seemed unusually low, I decided to ask them for their opinion, and they all said that Estee Lauder is a great company. And that gave me the confidence to invest. I picked up 6 shares at an average cost of $68.59, and today's price is $79.48. That gives me a gain of $65 or a solid 15.9% return. Wall Street analysts have a 12-month price target at $81.05, suggesting just a 2% upside from here. But the stock price was almost $400 just a few years ago, so I'm not really rushing to sell it and potentially miss out on a huge upside if the company gets back to its past glory. Next is Lyft. I'll be honest, when I saw Lyft stock was trading super low a few months ago, I thought to myself, why not just take a chance on it? So I picked up 50 shares at an average cost of $9.76 each for a total investment of $488. And guess what? Today's price is $15.94, which is a solid $309 gain or 63.3% return, making it one of my best performing stocks so far. Wall Street analysts have their price target for Lyft right at $18.92, so it seems like I've caught it at the right time. Honestly, this was more of a gut feeling buy for me, but I'm happy it's paid off so well. I'm definitely holding on to Lyft for now to see if it has even more upside. Now let's move on to Mastercard. Mastercard is one of those stocks that just keeps delivering. I own half a share with an average cost of $445.10, and today's price is $528.57. That gives me a gain of $42 or 19.2% return. Wall Street's price target for Mastercard is $571.05, which suggests an 8% upside from today's price. I think Mastercard is very important to the global payments infrastructure, so I see it as a strong long-term investment. Cashless payments are growing every year, and Mastercard is right at the center of that trend. So I'm definitely not planning to sell it anytime soon. Next company is Microsoft. Microsoft is a tech giant, and almost every single person on earth uses their products. I own one share at an average cost of $411.23, and today's price is $443. That's a gain of $31 or 7.7% return. Wall Street has a price target of $497.36, which represents a 12.3% upside from today's price. Between their dominance in cloud computing, their steady growth in gaming, and the expansion of AI tools, Microsoft is a company I have no plans to sell anytime soon. If someone asked me for only one stock to own for life, I think Microsoft might actually be the one. Now the next stock is Nvidia. As you probably know, Nvidia has been a star performer in the stock market, especially with the recent rise of AI. I have 5 shares of Nvidia at an average cost of $114.11, and today's price is $141.92. That's a gain of $139 or a strong 24.4% return. Wall Street analysts have a price target of $176.14 for Nvidia, which suggests a 24.1% upside from here. And with their leadership in GPUs and AI technology, I think Nvidia has a lot more room to grow. It's been one of my best stock picks so far, and I'm definitely holding onto this one for the long term. Alright, let's move on to PayPal, a service that I personally use all the time myself, both for my personal and my business transactions. It's been so convenient for me, and I know I'm not alone in relying on PayPal. So I bought 2 shares at an average cost of $60.93, investing $121.86. Today's price is $89.87, which means my investment is now worth $179.74, a gain of $58 or 47.5% return. Not bad for a company I already believed in and use all the time. Wall Street analysts have set a 12-month price target of $89.13, which it's basically sitting at now. PayPal is such a key player in the digital payment world that I'll probably keep holding onto it for the long run, and I think the Wall Street's price forecast might be a bit too low. Next up, we have Shopify, and this one hits close to home. A few of my family members use Shopify for their online businesses, and as far as I understand, Shopify operates in sort of a monopoly in the small business e-commerce space. They also operate on a subscription-based pricing model, which gives the company a very predictable revenue stream. I have 14 shares at an average cost of $62.29. Today, Shopify's price is $118.70, which means I gained $789 or an incredible 90.6% return. Analysts have set a price target of $116.33, so the current price is already slightly above it. I think Shopify is another stock where Wall Street is underestimating the company's future, and I'm happy to continue keeping their stocks in my investment portfolio. Now let's talk about Target, a classic retail giant. I bought 1 share for $151.29. Today, Target's stock price is $132.30, which is a $19 loss or negative 12.6% on my investment. Analysts have a price target of $143.65, which suggests a potential upside of about 8.6% from here. Honestly, I still have confidence in Target long term, especially given its strong brand and loyal customer base. For now, I'm holding onto it and waiting for a rebound. Now onto the fan favorite, Tesla. Elon Musk is a visionary, and as you probably know, he's now in a fantastic position with the US government after the election of Donald Trump. This could mean even more opportunities for Tesla to thrive, especially with their cutting-edge innovations in EVs, energy storage, and autonomous driving. I picked up 2 shares of Tesla at an average cost of $172.22. Today, Tesla's price has skyrocketed to $394.70 per share, which means I'm up by $445 or 129.2% return. This is my only company so far with a return rate above 100%. Wall Street analysts have a 12-month price target of $251.10, which is way below today's price, suggesting that Tesla is overvalued in their view. But I personally think that Wall Street did not learn its lesson that it's not a good idea to bet against Elon Musk, especially as he's in such a great political position now. Now let's move on to Unilever, a company that makes so many of the everyday products we use, whether it's Dove soap, Lipton tea, or Ben & Jerry's ice cream. I bought 3 shares at an average cost of $49.66, investing $148.98. Today's price is $59.04, which means I've gained $30 so far or 20.7% return. Analysts have set a price target of $69.50, so there's a potential for a 17.7% upside from here. I think Unilever's strong portfolio of diverse brands gives it long-term stability, so I'll be holding onto it for long-term. And last but definitely not least, let's talk about Visa. Visa is a powerhouse in digital payments. It's everywhere, and I can't think of a more reliable long-term investment. I bought 1 share of Visa for $268.88. The current price is $311.57, which means I've made $43 on the investment, or 16.3% return. Analysts have a 12-month price target of $328.59, so there's still room for a potential 5.5% upside. Visa's dominance in the payment space makes it a staple in my portfolio, and I'm happy to keep holding it for the foreseeable future. So overall, I put $9,000 into my account, and my portfolio is now worth $11,740. This means I'm up by $2,740, or 30.4% return on my entire account. 19 out of my 21 investments are profitable so far, which are all in green colors. Only 2 companies, Boeing and Target, are not profitable yet, but I think they have a massive upside potential. I'll be posting a similar monthly update video about my $9,000 dividend stock portfolio in the next day or so. I'll also post my December stock picks next week, so make sure to check out that video as well. As always, thank you so much for watching this video, and I'll see you in the next one.